Hi, it's Catalina from LoanSense coming to you today from my lovely couch in sunny St. Petersburg, Florida. This is actually my second house. And I was able to close on this house after I was declined multiple times for my first home that I bought in Sarasota, Florida. And my loan officer told me I couldn't qualify for multiple reasons, citing my student loan as one of them. And that was when I discovered you can enroll in a different program and adjust what's called the debt to income, and I was able to close 2 months later. I share that story because it's very relevant for in today's economy as housing prices are going up, and if you're thinking about buying or wanting to buy and you have student debt, even though you may not be paying it, adjusting it is really, really important if you want to achieve home ownership. So I say that because when my loan officer said, pay off your student loans, and I thought, man, how long is that going to take me to do? Even if I live on ramen for 5 years, how much will this house at the time was listed at like 150? How much will this be in 5 years from now? Something probably so much higher, couldn't afford. So I was so motivated to try to figure out what to do, right? I share that story. Today I want to talk about, if you like the content around student loans and also strategies on how to move from debt to wealth, like please subscribe to our channel. I'm the founder of a software company that is a digital student loan advisor, but I basically help not just borrowers, but we help loan officers and lenders understand how to qualify their borrowers for more home based on adjusting their student loans. Okay, so today I want to talk about what's the latest news in the student loan world. If you like this content, the next video I'm going to make that we're going to post on the same day as well is going to be around a case study, a loan officer case study, and the new updated pricing we have for loan officers. So that will be the next video. So right now, today's video, I'm going to talk about, well, President Biden did a State of the Union yesterday. And, with the war in Ukraine happening and all the political instability, his State of the Union really didn't address student loans. It's an indicator to many people that by not addressing it, it means he has no plans to actually pass any form of relief that is not in the act of Congress to do, right? Of course, like I mentioned in previous videos, the Democrats are really, really worried that this means young people are not going to show up to the polls this coming November for the midterm elections. And of course, the Democrats want boosted participation, especially by young people. So there's a concern there, but not addressing in the State of the Union with what's happening. There's concern that the president really has no plans to do anything, including not extending the payment pause when it comes to May 1. So just keep that in mind because, you don't want to be caught blindsided. You want to be ready, right, when May 1 comes around. Additionally, there is a CNBC article came out that I just wanted to mention that says that 93% of people are not ready to restart payment. Okay, they did a survey of 20,000 student loan borrowers, and they're like, hey, 93% of people are not ready. Oh no, they did 23,000 people. A survey done by the Student Debt Crisis Center said that 93% are simply not ready. And they go into stories about the CNBC article goes into story about, a mother of 4 has 46,000 of debt with a monthly payment of 600, and of course also other family stories of getting into medical debt and all kinds of things that come up, and you have other expenses to pay. So if that is you, know that you can enroll into a different program that will lower your payment. So don't let your payment or the one that you will have to start paying in May, if you have a precarious financial situation, don't think that you have to start paying that amount if you really truly cannot afford to pay it. So I wanted to put that out there. But this article brings up a really good point, by the way, which is that the Consumer Price Index shows that the cost of goods have gone up by 7.5%, which is the fastest rise in the last 4 decades of our consumer goods. Meanwhile, inflation means that even as wages rise, the value of our salary and our dollar is going down. So when we went into payment pause 2 years ago, now the same payment may actually cost us more because of inflation and the cost of goods. I mean, that's a really, really good point, right? Because I know my student loan payment will not be changing from before the pandemic to now, but of course the cost of living has increased, the cost of rent alone. I mean, I remember, I have a mortgage, so my mortgage payment has stayed the same, but I know the cost of rent for those renting has certainly gone up. And the reason I know is because I'm a landlord, and before the pandemic, what I could rent for like a 1 bedroom for $700, I would rent for like $700 something in my area. Now I could easily rent for like $950, $1,000, the same exact place, you know? So with the cost of rent increasing, and maybe wages went up slightly, but it doesn't make up for the cost of living and the cost of groceries and all these things you need to live, right? So it's certainly a consideration for people to make if they really can't afford their payment. There are programs to reduce it and also to get subsidy, of course, on the interest and to qualify for loan forgiveness if that is you at all. So among fully employed borrowers, 92% said that they're concerned about being able to afford their payment due to rising prices. That's interesting. So exactly what we said, right? For some, it makes sense to enroll into an income-driven plan, which is exactly what I just mentioned. We can advise you completely for free, a completely free analysis on our website on what the best plan is for you. And if you want our assistance enrolling, we have workshops and we have advisors on standby to answer your questions, experts on standby. We're so excited recently because we've gotten news of more people qualifying, emailing us, and showing their documentation that they've got their debt eliminated. So we're super excited to help borrowers not just reduce their payment, but actually get total loan forgiveness. And that is thanks to President Biden, by the way, for funding temporary expanded public service loan forgiveness and various other programs that more generously fund loan forgiveness, right? So even though he hasn't given mass forgiveness, he has increased funding for targeted loan forgiveness programs. So anyways, if you find this type of content useful, please subscribe. Please stay tuned for videos. We release them weekly, and subscribe to our channel. Like this video if you like it, and we will talk to you again next week.